If you follow all the rules in this video, you can be a profitable trader. Anyone can be a profitable trader, but you have to follow these rules, right? In today's video, I'm going to break down the head and shoulders simple pattern formation, okay? And if you look at my past couple videos, we just took a live trade on that and made over $2,000 on one trade, okay? Anyone can do this. Today, I'm going to break down the steps that I use to identify these patterns and take the trades. So what we're going to be doing is called a head and shoulders pattern. Head and shoulders. Okay, so there's two types. We have an inverted head and shoulders pattern and then a normal head and shoulders pattern. Okay, a normal head and shoulders pattern you're going to find at key levels of resistance. Okay, now an inverted head and shoulders pattern you're going to find at key levels of support. Today, we're just going to be talking about the normal head and shoulders pattern. Okay, so we're going to find these at key levels of resistance. What is resistance? I'm not going to go into crazy depth of the basic terminology because I can make a separate video on that. Today is just head and shoulders. Resistance is just going to be a key level in the market that price is going to start to go down. All right. We're going to find a lot of supply at this level, but in basic terms, price will decline. Okay. The bears are going to get involved. So we're going to identify resistance with red lines. And then support is going to be with green lines like that, okay? A support is a level in the market where price starts to go up, an increase in value, all right? So head and shoulders, what we're going to find is a key level, a key resistance level on a higher time frame. It's going to be a weekly, a daily, a 4-hour time frame. These are all going to be considered higher time frames, okay? Now, we wait for price to reach a key resistance level. When it does that, then we want to drop down to a lower time frame, which is going to be the 1 hour, 30-minute, or 15-minute. Okay, but if I'm looking on like the weekly or the daily time frame and I see a head and shoulders pattern, then I can probably drop down to the 4-hour as well. Okay. All right. So once we have identified this key resistance level and price has reached that level, we have to look for this pattern. And what this looks like is something like this. Just like that. All right. So if this is going to be a left shoulder, oh, I can't spell shoulder. Okay. This is going to be the head, and then we're going to have the right shoulder. There. All right. So when you look at it, you can kind of see the pattern, right? This looks like a shoulder, this looks like a head, and that looks like a right shoulder. Okay. Now, the key rule of thumb that I use, and a lot of other traders will tell you other rules because that's what works for them, but what works for me is I don't like the right shoulder breaking too high above the left shoulder. Okay, I like to have the right shoulder about equal height to the left shoulder. Okay, that's my rule of thumb. Okay, it's very conservative, it's pretty safe. So this is what we're gonna find. Something like this at that key resistance level. Okay, perfect. Now how do we end? We've identified this pattern. Now how do we enter? When do I know when to take the trade, right? So we see the right shoulder form. We have to be patient and we have to wait for the right shoulder to form. Okay, so there's two ways to enter. Okay, two ways that I enter. Okay, on the right, there's the aggressive entry, which is on the right shoulder. Specifically, we're going to find an engulfing candle. Okay, now an engulfing candle is, we're looking for a bearish engulfing candle. And this is when the bearish candle is basically larger than the bullish candle next to it. And I'll go ahead and jump. Let's see if we can find some here. So, for example, so all three of these are engulfing candles. Okay, all these bearish candles are engulfing because it's bigger than the candle before it. It's bigger than that bullish candle before it, right? So that's engulfing. This is engulfing because it's bigger than the candle before it. This is engulfing. It's bigger than the bullish candle before it. This is also engulfing, bigger than the candle before it. This is engulfing, right? Even this tiny little bullish candle is engulfing because it's bigger than the bearish candle next to it, right? So those are all engulfing candles. All right. What I like to see is I like to see an engulfing candle at this right shoulder. And then I like to enter at the close of that engulfing candle. Okay. Or break of the bottom wick of that engulfing. That's option number one. Okay. Option number two, let me actually type this out. Entry reason one. Bearish engulfing candle at the top of the right shoulder. Enter trade at close of engulfing candle or break of bottom wick on engulfing candle. All right, so that's entry reason number one. Okay, and we're going to find that at the right shoulder. Okay, now entry reason number two is I like to enter at the retest of the neckline. Okay, the neckline is just going to be this line here that it's essentially like the trend line that the left shoulder and the right shoulder make together, right? So the left shoulder comes up, it comes down, comes up, makes the head, comes down for the right shoulder, and this is the neckline. Okay. Now, the other entry reason is the break of a neckline, but a retest of it. Okay. So at this retest of the neckline is when I like to take another entry. All right. Now at this retest, this is essentially just another resistance level in the market. I like to wait for a bearish engulfing candle again. Okay. And the same concept. Enter at the close of that engulfing candle or the break of the bottom wick. Okay. So entrance number two, entry reason two is a break of neckline and retest, no, actually break of neckline, then enter at the retest level of the neckline. Okay. Now, at retest, wait for bearish engulfing candle. So it's that simple, right? And then once we get that engulfing candle, what we like to see is a continuation of that downtrend, right? So perfect. So we have our entry reasons. Now, the next important thing is when do I take profit and when do I cut my losses if the trade doesn't go my way, right? So for entry reason number one, okay, so if I enter at this right shoulder, my take profit is going to be the neckline, okay? So if I enter at the right shoulder, my take profit is this neckline. My stop loss is going to be just above the wick of the bearish engulfing candle, right? Just above the wick of the bearish engulfing candle, which is going to be somewhere just above the right shoulder, okay? Because that way I know, okay, if that wick gets broken, then my trade is invalid. Okay, move on to the next reason. So that's my take profit for entry reason number one. All right. Entry reason number two, I'm going to have my stop loss again above the wick of that bearish engulfing candle, but my take profit is going to be, get my price, it's going to be the 3/4 the height of the pattern. So from the neckline to the top of the head, I have to calculate 3/4 of that. Okay. The way that I do this is for this example, it's 157, so 157. Divide that by 4, then multiply that by 3. That gives me 117. Okay, so 117, let's call it 115, and that's what that would look like. Okay, so my take profit is 3/4 height of the pattern, because that's what our breakout is going to be, hopefully. And then my stop loss is just above that wick of that bearish engulfing candle. Okay. Now let's look at that. Let's look at this on an actual chart. So just recently, last week, we had bearish head and shoulders pattern form. I took this trade. You can watch my other videos. So true to my word here. So on the weekly time frame, we had this trend line. Okay, this trend line, just like that, as we can see, hit all the way up, right? Price came up and was retesting this trend line. So price came up and was retesting this trend line. All right, so what do? I jump down to the lower time frame of the weekly, which is going to be the daily, and I notice how we had this head and shoulders pattern. Let's see if you can identify it. All right, so we had, I'm going to get my tool out, head and shoulders. Just like that. Okay, so this is the left shoulder, this is the head, and that's the right shoulder. And then this is the neckline right here. So let me draw that neckline just like that. So I noticed how we were at the right shoulder and we formed a bearish engulfing candle on the daily, right? So for me, entering just off of a daily candle, it can be a little iffy because there can be a lot of movement before we actually get that move down. So I went down to the 1 hour and I looked for a little more precise entry reason, and I found it just in this little consolidation down here, right there. So we were consolidating down here with this little trend line, broke the trend line, and I entered around here, and then it shot down, right? So my target was the neckline. I think I closed a little bit early though. I didn't exactly target the neckline. I closed somewhere down here because I wasn't able to manage my position actively, so I ended up closing it. So, which is fine. We still came out profitable. We stuck to our discipline on the entry reason, right? So what can we look for now? Like, I'll be looking to enter this again because we still have to break the neckline. So if I go to the daily, it looks like we just came up and we went to breathe a little bit last week. That's what this looks like to me. Came up to get a little bit of breathing action and rejected this resistance right here. Okay, so that's what it looks like it's happening. Rejected it. I think what's going to happen is we'll come back down to the neckline, and then we're going to break it, retest it, and eventually I think like the levels we're going to hit going to be somewhere around here. So if I draw this trend line here, I think what's going to happen is we're going to hit this trend line, and that's going to be our stopping point before we bounce again once we break this neckline, right? So what I look to be doing this week is finding an entry reason somewhere up here, and if I can't find one, I'll wait until we break this neckline, retest it, and then look to chase that downward movement there. So yeah, it's a real world example of the head and shoulders pattern. Worked out, and you can find these anywhere. So like I said, higher time frame, resistance levels, jump down to the lower time frame, and you're going to be able to identify this pattern all the time. And this works for support levels as well, except that the pattern is just upside down. So it looks like this. So it just looks like that. You know, a little sloppy, but that's what it'll look like. So it's just upside down. We got the left shoulder, head, and the right shoulder. So awesome. Go ahead and drop a like, comment, subscribe on this video. Let me know if there's anything that you guys would like to learn specifically. Yeah, and I'll catch you guys in the next one.